Yo, what is up? What is good? What is good, guys? Welcome back. What is up? What is up? What is up, man? Cool. Trader in the trees. What's up, man? Aldo. Sorry. The pain train. What's up? Let's fucking go, bro. Let's fucking get it. Back at it again. Back at it again. Let's go. Alright. Yo, Tess. What is good, man? Yeah, we're gonna go over everything today. I've been on vacation, guys, so it's been a little bit hard for me to stream and update stuff. But we're back. We're back at it, and we're gonna do it. All right. We're gonna update it all. Alright, you guys can see it all, right? Everything's good on the screen. I did. I went to Texas. I was in Texas for a little. Solid squeeze. What's up, man? Love you, bro. Echo, what's up? Alright, let's turn down the music a little bit. That was the intro, alright? Gotta have that good music. Yeah, we'll go over the macro and we will go over the micro for sure. We're gonna start with the micro because I want to update some things intraday. So what I'm looking at here intraday is a double top formation. Okay. We haven't quite got that yet. But I see a push here in the afternoon back up. Okay, if we don't get it today, it's possible we would get it on Tuesday, right? Because we have a 4-day weekend or a 3-day weekend. So I'm personally looking for that double top and then a breather back down. This has been pretty long consolidation here for the past 2 months. I mean, we've just seen sideways trading here, shaking off as many people as they can, just like they normally do back here on every consolidation phase that we've seen. Things are still tracking for the July point of interest, in my opinion. We haven't broken down or up. Again, we're just trading in this zone here, and I'm looking for that breakout, right? We're looking for a breakout above 16. I will pull up the, let's see where that regression trend is. So we're gonna pull up this one first, parallel triangle. You guys know how this works here. Okay, so let's see how it looks here on the screen. All right, let's see. You guys can see that? Great. Okay, so on my screen, these are highlighted different colors. This one's green, blue, and red. Okay, and these are all zones coming back to this parallel channel, the year parallel channel, where you come back into this blue zone every year. Okay, and we've seen this trend happen 3 times already. So the year mark, is obviously right here on this January all the way to May. It's 120 days, 4 months, where you basically stay in that channel before coming in and out into other channels. So in the green portion here, these parallel lines line up with this resistance level back here, and it's a trend line, a speed trend line, right, that intersects with these high points. So right here, what's happening basically is that there's very low volume around these ranges to where volatility becomes more likely than on these other ranges where the dark pool is trading, you know, as I say every time, over time it's trading on these ranges because there is so much, there's so much options on these levels here. Specifically leaps here in the way that they're manipulating the price, because every year you go back into that range. So if there's options that are being controlled here, okay, every time I think it's like $5-10 that it increases. Now this won't matter once we squeeze, but as they're manipulating the price action, you're gonna see AMC gravitate back towards its zone every single year. But again, this won't matter once we actually squeeze. It's just right now this is what they're doing. So based off of this trend, I had talked about how we can stay on this red zone, we can cross below it, or we can go back into the blue zone, right? But right now what's happening is we're on the red zone. We haven't crossed down or up, and that's what we've been waiting for. That's why this is taking forever. It's taking forever, dude. And yeah, we had some points of interest play out, not to the level we wanted to, right? Not 20, not 22, but we still had that volatility spike. And I'm going to show you. Take out the moving average here. So we talked about this, about how points of interest work, and volatility zones are important because this is what the cycle tracker is picking up, okay? And it's cycle analysis. There's a lot of things that go into a cycle analysis, not just, you know, the option chain, but there's implied volatility. There's cycle sectors trading against each other, so you track other cycles and how that affects the current cycle. Option expiration dates, you use regular TA as well, you have to, and then pattern analysis, right? Bar patterns and getting natural fibs, stuff like that. That all has to do with coming up with these zones. So these guys right here, these wicks that are larger, that's where you get that's your volatility right there. So you have one right here, you have one right here, one right here, okay? Here, 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 and here. And guess what? These are all part of the cycle. These have all been predicted through the cycle tracker, okay? All of these. Now, the thing that people don't understand is that you can't predict the price. The price is not you can't predict if this is going to go to 50 or if it's going to go down to $3. You have to use TA for that. TA is the only thing that works. And I say that a lot because, you know, I even though I'm putting out some sort of price target for you, a range, it doesn't mean that it's going to go there. It means that there is going to be volatility more likely than not, but it doesn't mean that we're going to hit 22 or we're going to hit 10 or whatever. So I like to say that every time so that you guys are aware of that. And you know, with this tool, you're able to come up with your own price targets and your levels to track, because the cycle tracker, all is doing is coming up with these volatility zones where the price is more likely to go up or down. And it's been tested on many, many stocks. It's not just AMC. It's just AMC's was like that breakthrough stock that kind of brought this out, you know, this manipulation that basically happens on every over-leveraged stock. Every over-leveraged stock. GameStop, Mullen, BBIG, DWAC, all of these guys, cycle tracker. So, with that being said, the next point of interest is not happening until the end of July. We know that. The levels that I was tracking based off of this point of interest and the pattern that I was tracking was a broadening wedge. So it was supposed to look something like this, right? In the short term, right? To set us up for a giant cup here and a double bottom on the macro, okay, which would be a George W, as Trey likes to say, and that would have kicked things off to go, right, the squeeze. So we don't have that quite yet, and you know, we're trading in the zone, which is sideways. There's a lot of dark pool volume being traded, and the price is being suppressed. You guys see that through failure to delivers. They're very high right now. I talk about how that doesn't really matter in tracking. Like, don't set your dates based off of the failure to delivers, because they don't necessarily matter in the way you think. Same with cost to borrow. It's not something to track dates wise. Like, I would ignore the dates, pay attention to the numbers, and when they come out, but not, yo, if it's due on this date, they're gonna have to release all these shares by this date. That's not how it works. So I talk about that a lot, but it is important that there's a lot in the coming weeks, because that just tells you that there is a lot of suppression happening right here, and you can see that. It's just trading sideways. A lot of suppression. So that has me really bullish for the next couple of weeks going into that July point of interest. Whatever happens, guys, if we end up going up here in the short term and create a projector, it's more likely than not that we are going to get that major push. But remember, that July time is just a point of interest. The rest is TA. The rest is, what is the chart looking like? What is the setup looking like? Are we good to run up? Are we good to, you know, potentially get another leg up? Get the squeeze? Like, this is just a point of interest. All right? I want to make that very clear. All right. Wesley, what's up? Patty Mac, what is good? So, Patty Mac, I hope that answered your question, man, about that, the 17, 16, all that stuff. That is TA, regular TA done through, with the help of the cycle tracker. But what is important to track on those ranges is, okay, very important to track is the volatility. And one thing that I can confirm here is the cycle has yet to fail on picking up volatility zones. That, like, it hasn't happened. The cycle has tracked all of these zones right here have been picked up by the cycle. These large candles volume right here, they've all been picked up by the cycle. Now, this is where, like, that's why I keep saying it's important to know that TA is another factor that goes into this, because there is the dark pool trading system, and then there's what we trade in, right, which is everything else that we have access to, and you will see pretty different trading system happening. So, you know, sometimes the price is not going to be as real compared to the dark pool system, and that sucks, unfortunately. Yes, we all get the same chart trading here, but in the dark pool it does work a little bit different. And I mean, you can tell right off the bat with these candles, guys. Here there was a lot of volume coming in, and we barely saw AMC go up. Okay, it went up from 12 to 14 that one day. Okay, and that's what we got based off of this candle. Okay, there wasn't that much price increase from that volatility spike, but it's important to know that it's there. Okay, and if we can track that, you know, especially if you're trading options, you can make money doing that. And that's kind of that's my approach here with AMC, with other stocks, is understanding how volatility works on individual stocks, because again, that's where you make your money. You can be one of those. You can be waiting for cost averaging with shares as well, waiting for the squeeze. It's definitely going to be a less risky approach when trading AMC for sure. But along the way, you can also learn how options work and how volatility works, and you can benefit from that and then add on to your position, right? It goes both ways. There you go. Robbie trades both. He trades both. He knows what's up. Guys, 145 in here and 25 likes. What is this, man? What is this? Are you even a sub, bro? Are you even a sub? Okay, it's a little better. Still at 35, still, 150 you in here. You guys want to slap that real good? Slap it real good. Appreciate it. This is the thumbnail here. I got this guy in here. I was playing around with the charts. Sometimes I do. I know a lot of people get a little wonky with these because they're a little trippy, but sometimes, getting that 3D effect here on Amy does give you a better perspective. All right, just saying. Playing around with this, we do have. This is the support and resistance curve line here. Okay, and I mean, just look at where we're at right now. We're right here. Okay, it's. If we're going to keep trading in this zone, going into this longer weekend, sometimes you do see short-term dips before the weekend, but after a long weekend, we have seen a positive trend on AMC and GameStop. So it is possible that if we don't get this double top here today, going into the 1440 area, that even if we do come down below and try and test resistance one more time, that coming into next week, we should break out fully of this resistance, right? We can't trade in a zone forever. There is going to be a time where there's too much narrowing happening and you must break out. So we're gonna get that very soon. But it's just long consolidation is what is happening right now. Yep, they're just trying to bore us, exactly. You know how the game works. They're trying to bore the shit out of you. Yeah, it's been a while, guys. It has been a while. It sucks. It sucks looking at the charts, okay? Knowing that, this has been going on for over a year, but I think that there's a lot to benefit from looking at AMC. I think it's really opened up a lot of opportunities for not only making money on AMC, but really making money on other stocks with this approach. And I think people need to really understand that, this is not going anywhere. We're going to keep trading this play and know how this play works. But you also have to be smart, right, and understand that when things are not playing out how we're anticipating things to, or like when, I push this message out a lot, but when stocks trade against each other, guys, there's opportunity somewhere else, okay? While this is coming down, there's going to be another sector going up, vice versa. So this is really important to understand with cycles, because if one's going to take a breather, you know that another sector is going up. Why not make money in that other sector while the other one is coming back down, right? Now, I don't push this out with shares or anything like that. Shares is more of a cost averaging thing for me, because you also have to consider that AMC is one of those plays that is, anything could happen at any given time. If the algorithm breaks and this thing decides to squeeze after hours, I mean, just think about not being in on that position, right? So consider that with AMC and GameStop. These are stocks that sometimes are not going to be that predictable when the cycle does break, because the cycle will break, and it'll break when we squeeze. So that's something that people should consider, because there are people that just that don't do that. They just don't trade absolutely. They buy, sell anywhere, and then they end up missing out when this thing starts going up after hours, like when it's unexpected, right? So again, we do track the little zones where we know something is more likely to happen, but that doesn't mean that it's going to happen on that zone. At some point, again, it's going to break, and it's going to happen. And typically this will, in my opinion, the way I look at it, is that it'll happen at a point where the stock is vulnerable, meaning that we will probably be above certain levels. For example, like, we won't be down here when that happens, I don't think. I think we are going to set up, and then the cycle is going to stop working when they can't push the volume back down anymore. So I do see that happening way up here in the future. I don't see it happening down here. All right, let's look at Amy intraday and see what's going on. I felt like I had to just kind of give all that to you guys, since we have not been here on stream for a while. Again, I was on vacation, so I apologize for the lack of updates. But I am back now, and I'm good to go, and I'll be updating every day, okay? Make sure you guys join the Discord, too, if you haven't already. It's on the link below. Bunch of nice people on the chat. I also have a Patreon if you want to check that out. I do send out alerts and stuff for other stocks and their cycle trackers. This week we had a couple. We were tracking Mullen, and we were tracking SPY, AMC. Typically, I will trade anywhere from 2 to 4 stocks that I know, that I'm familiar with. I don't send out many option trades or anything like that. I keep it very, very narrow with those trades. And then the cycle tracker obviously will point out cycles that are being tracked against current cycles with volatility zones. And then once I get those signals, I alert them in the chat, right, for the Discord. So there's a couple of good ones coming up next week after 4th of July that I am currently tracking. And yeah, check it out, man. All right, let's look at the SPY. I'm curious, does anybody like this perspective on looking at stocks, or are people like annoyed with this? because I genuinely want to know. I feel like it gives me a pretty good perspective playing around with these trend lines and stuff. Dude, this thing is dope. Like it? Hell yeah. Hell yeah, we'll do this for a little bit, because, yeah, we'll do it for a little bit. For the SPY, guys, I personally believe the bottom is in. I did alert this this was on Twitter last week. I personally don't see it going below this current level. We would have to see a drastic drop here in the next couple of days. If we do, then we are headed towards like a recession territory if we start crossing below this range. I've taken a bunch of patterns and analyzed this entire sequence here of the SPY. Many other patterns using just cycle analysis, and this is a fib level that's very important to track for a bounce here. If we don't get this bounce and we don't start coming back up here in the short term, then it's likely that this is going to break this sequence and turn into another one. Basically, this is where things play out inverse, and what you get here is a pretty dramatic drop, basically doing something else. So I don't want to see a break. The level we would track here, the first level would be at the 358, okay, right here. And it would probably come all the way down to 350. And then from there, you have this resistance down here at 340. Again, I'm not looking at that right now, but if it does come to it, I will alert, right? But right now, it seems like we're holding up pretty well. Let's go here on the minute. Track it on the minute. This was a chart we were using in the Discord, and I was showing how this is the beauty of parallel channels, is that it tracks two levels, right? Support, resistance, and you trade in this channel back and forth. You start bouncing off of these levels. Sometimes this works better than just regular support and resistance trend lines, but you have a couple of zones here that are being tracked, and where there is heavy bounces. So we alerted this back on that bottom right here, and the SPY ended up going up all the way up here. Those contracts went up like 600%. It was a pretty hefty gain on those option contracts that we had in the Discord. Now the thing is, I did have a continuation here going upward, and we're getting the complete inverse happening. So this is how you know that the cycle is breaking that pattern, and now we're playing the opposite completely, right? Now this doesn't mean that the sequence is over and we're gonna keep falling down, but there are certain things with patterns, okay? There are certain sections that won't track identical. If you're tracking, say, multiple patterns, there are going to be some sections that will kind of do their own thing, and that's fine. It's important to know that, you know, patterns do shift around a little bit in between the volatility zones, right? So this is a volatility zone in a pattern. This is a volatility zone. This is one, right? These are all volatility zones. You can tell with the candles too. Now, in between, it's harder to track what's happening in between, and that's fine. This right here would be similar to this, right? Or similar to something back here. And it should just kind of be in the back of your mind that that's just how the analysis works. But, you know, being able to spot these up wicks and down wicks very quickly on the macro is where the money is at, in my opinion. You could make so much money on tracking those. Back here, guys, this drop, okay, was also tracked on the tracker here, and I got the alert on June 6th when this happened. Some of these contracts, okay, and I didn't go in on these unfortunately, but some of these contracts were trading for like a penny or 2 cents. They went up to $10, $10, $12 pop for these contracts. So just imagine the percentage increase on those. That's pretty insane. A lot of room for options, guys. Options are a really good way to make money if you know what you're doing. But you know, it's not, and it will never be financial advice. But you guys, if you haven't learned what options are, I highly recommend you learn what they are, and then also paper trading is the way to go. If you've never if you've never traded options before, I think paper trading is the smartest thing you could possibly do, especially if you have built your portfolio and you're making really good money just trading just stocks and not options. It's really good way to do it is paper trade. Paper trade, paper trade, paper trade. All right, I'm going to try to answer some questions here. Let's go to AMC real quick. Sorry, guys. Trying to get back into this whole flow. Let's draw some levels here, and then I'll answer some questions. Don't want to cross this. Also, if you guys are on the Discord, I am going to be alerting some stuff here as well, and I have obviously my Discord here, chat below, so I will be sending out some stuff. But this is the level of support that I'm tracking for AMC right now. I don't see the for the option strategy, guys, that I had posted a while back on the July 15th contracts. Personally, the theta is for 1 day here. Would not be a huge theta kill compared to other, like if you're doing weeklies or something like that, then I would see next week really hurting on something like that. But if you're expecting a short-term volatility run, the theta is not going to matter as much. Remember, volatility is the basically what makes these contracts go from pennies to dollars in a matter of minutes. So that's personally what I look at when I trade options. Theta is a big deal, but it is more of a big deal for stocks that are just slowly climbing up rather than slowly climbing up and then having a major run. So we're just going to have to track these levels. Again, we did have a volatility zone here that played out. Not to the level we wanted to, but it still played out. And as long as we continue to rise in this trend, we should see a double top. But if we don't, then there is a small risk and a small chance that we do come back down and test support one more time before breaking out of this wedge. Okay? Going to be the first level of support, green. Okay. All right. I guess I'll answer your question, Patty. I mean, I feel you, bro. I feel you, as I know exactly what you mean, but you do need to understand that when, like, I'm never gonna blame. I'm never going to blame the SPY on prices not being hit or not, because that's a contradiction. The SPY has a cycle too. The market has a cycle. So if something is not being hit, it's not because of the cycle. The cycle, again, has predicted every single volatility zone. It's been spot on. Like, there hasn't been a miss. You can go back on all the videos and check the volatility on that zone, and it'll be there. The thing that you can't predict is the price, and I've said that before many times. If I'm making a prediction, I have to hold myself accountable for that prediction not being right, and I did, right? Because we did not hit 22, and I've said that already. 22 is a price prediction based off of technical analysis, not cycle analysis, because cycle analysis just picks up volatility. If you can make money off of options doing volatility, then you're making money. If you're just trading shares, unfortunately, that you're not going to make money off of volatility, because volatility is something to do with the option chain. It has nothing to do with, buying and selling shares. There's nothing in there. So what I push a lot, and this is part of the Discord that I've been talking about here, is that if you know how to trade options, volatility is obviously a risk factor that you have to consider. If you play just option calls, you're risking the potential of volatility turning complete inverse and playing to the downside, right? And you don't make money on puts. So there's strategies you can do that minimize that risk for a lesser profit, but you can still make money off of that if you know what you're doing. Again, so it would be you guys need to understand that if I'm not able, if you're restraining me from being able to make a price target, it defeats the purpose of me doing what I'm doing right now. Like, if I'm trying to find these zones for you guys using the cycle tracker, and then not give you a price target at all, just say, okay, we have a volatility zone, but I'm not going to use TA, or I'm not going to study this in any other way possible for you, then again, it just defeats the purpose of doing TA for AMC. Like, you have to do it's okay to make predictions on AMC. It's okay to make predictions on GameStop. It's okay to make predictions in the market. Like, there's absolutely nothing wrong with that. You as a trader have to be smart and have to be cautious yourself and make your own predictions at the end of the day. Use the DD that you have gathered and found through the entire, all the YouTubers or all the TA people that you watch. You make your decision in the end. I'm not making that decision for you. You're responsible for that. So I'm not going to stop doing what I'm doing because, again, it's working for me. But you do have to be careful at the end of the day. You do have to be careful with and make your price targets when we do get close to these volatility zones, okay? So, yeah, I thought I would respond to that because I do get that a lot, and I get that a lot on Twitter too, and I'm just like, what do you want me to do? What do you want me to do, bro? Tell me what you want me to do. All right. Trying to set up a system here where I could read the chat. Okay, hold up. Yeah, no, my guys, my outlook has not changed for July, okay? The setup is different, of course, but my outlook has not changed as far as the volatility zone goes. Like, everything's been tracking according to the play here. And remember, like, we are tracking a lot of volatility zones going into July, and you can go back on all of the streams here and look at these zones that we've been tracking. Okay. If things are tracking according to the current setup, okay, and we are not breaking below, or we're not breaking, if we're not breaking below this zone here, things are tracking good for July. They're tracking good for a setup, okay? And I mean, July going into August, right? That is there. I'm very certain of that volatility zone right there. Now, as far as the current setup, like for a squeeze going into July or going into August, that is still on the table too, okay? But you do have to consider, and I'm considering this, and I'm telling you this, I've been telling you this in advance, guys, multiple times on stream. Don't just look at one date. Don't just look at one level, okay? There are other volatility zones that we have been tracking. There's been the end of September going into October. That has been one that we have tracked since back here, since the projector pattern right here was broken. We talked about October, we talked about July. There's two that we have been tracking here, and you have to understand that if one does not play out, okay, then you have to track the next one. That is just how it works. No one is going to be able to tell you, okay, exactly when something is going to happen. If they want TA to play out in a different way, they have a different agenda here. I do believe, though, that we can track these zones where the price is likely to go up or down, and I think that's a huge breakthrough. I think that's honestly more than enough here, is being able to track when something is going to happen. So knowing that, again, shouldn't really frustrate anybody. This should be very helpful in the end, because we've done it in the past before, guys, and I think we're getting to a point where things are finally turning around. Here, I'll show you let's see, quad witching right here. This one is one that I've been talking about here for a while. Okay, this is the quad witching curve. Okay, so what this means is that these are all spaced out. These are quad witching dates. Okay, separated exactly the same distance apart. And these zones right here, this purple zone, this one, this follows a price range every single time. That's why you have this curve happening. So we finally got to a point where we are on the same level as the previous quad witching date. So what typically, when you do TA, when you do cycle analysis and stuff, you follow some trend, a positive trend or a negative trend, and that sort of that helps with these price targets, these levels that we are tracking towards that volatility zone. So here, what we have going on, this curve, lining them up exactly. Okay, you can see it on this S curve, guys, where things are lined up. They're lined up on the quad witching dates. Okay, so lining everything up here, we're finally getting a curve up. It doesn't matter, okay, if we don't come up here and we don't set up for a squeeze here in July. Okay, I've already showed you guys the monthly chart and the possibility of it looking. So I gave out scenarios so you guys can see what the monthly chart would look like for a October squeeze and for a August squeeze. So that should have kind of helped a little bit with the perspective part of it. We're getting a curve. This is bullish right here. This is very bullish. There's a lot of other things that we're tracking here. It's not just that right there. We're tracking tracking the cycle, obviously. 62-day cycle. Okay. And these line up. This one lines up for August 2. Okay. Run up. August 12th peak. So that is that volatility zone right there. And look, right now, the red portion right now is actually playing out inverse to what we've seen in the past. So back here, some of the more prominent ones here, these two looked identical. Like, identical. And they both played out that point of interest on this red mark here. Both of them. Okay? They both went up. So both of these played out identical. This one was sideways trading. There was a lot of dark pool trading right here. This one played out inverse. This one played out inverse. Okay? And this one right here is looking to play out inverse. It's finally curving back up. So as long as we respect this trend line right here, this should play out inverse. And that would be very, like, extremely bullish because it would set us up for this cycle on the projector, meeting up for this run up right here in July. All right. I hope that made sense. If you don't know how the cycle works, there's videos on the website. There's like 5 videos that I posted that talk about how the cycle works. But guys, I'm bullish, man. Things are tracking so far, and they have not broken down yet. So I'm gonna keep my conviction the way it is because things are tracking. Albert T, how do you get those cycle pictures on TradingView? Well, I made these on TradingView. You're gonna have to, so the cycle here is taken from this pattern back here, this whole thing. Okay, that's the cycle for you. Right now, it's using, so that you guys can see clearly what's happening. I use it's using fibs basically down here. So you take it piece by piece, right? And you change the height just so you can see what's going on. Because if you don't do that, then you won't be able to understand what's going on down here. So, or I'm sorry, I meant to say using, like, you're basically using log form on the cycle so that you can tell exactly what's going on, right? Like the blue pattern, it's so large. I mean, you got to shrink this guy so you can see what's going on back here, right? Don't change the range, the date range, right? Just the height is fine, but you cannot change the distance or else you don't have a cycle anymore. You would have a fractal. And we deal with cycles here because things happen on a cyclical level. Okay. But yeah, things are looking good. Things are looking real good, man. Let's see. SPY. All right, we're about to get a breakout here of the current level of resistance. Okay, this is a breakout here, and typically what we get is we either get a stronger push up and start climbing up, or we get a bounce here, like a mini projector. Amy likes to come in and out of channels, so, you know, unless we get multiple levels being respected at first, that does not indicate a bullish trend in the short term. So we would have to come up here, test it once, and then test another level back here, right? I like to test at least two levels to be like very, very sure of a positive breakout. So we'll do one here. Do one right here. This guy just broke out. And we'll draw our little S curve. So there's one here. And then we would want to see one more. It would probably look something like this. If we did have something play out, right, we would want to see an S-curve, which is just two levels of resistance being hit and broken, and then two levels of support being respected, right? So we come up. This looks a little wonky here. We come up here. And actually, this would kind of make sense because what do we have here? Well, we would have a giant cup on the macro. But that is a typical setup here that you want to see when breaking out of these levels, right? So this coming up here and then coming back down, obviously that doesn't confirm anything. You have to break through. Got to do something like that. So that is what I got here for the short term if things are bullish. If not, then we probably would stay around the zone here. Seems to me that Amy doesn't want to break below 1340 today. It's respecting this level very nicely, or it has been here the past week. This level at 1340. Yes, good point. Good. Trader in the trees, thank you for bringing that up. I was going to talk about it, and that I knew I was forgetting something. Okay, yes, the 1348 is about to cross. All right, you guys remember what happened last time it crossed, and then went with the cycle here, right? The 1348 EMA on the daily is about to cross, and last time it crossed, it ran up 166%. All right, so let's look at it. Where is it? It's not in here. Account general. There we go. Look at this. Look at this. Round 2, baby. One right here. What happened last time, guys? You guys saw that video. Okay, I'll replay it here for you. But we were saying the same thing right here. Okay, going back in time, how they were kissing, right? Replay that guy. Boom, cross. Okay, from the low to the high, it was 166%. And look at where we're at now. We're kissing it. We are kissing it. Real good. All right, so we get across here. And I think we'll get another push up. And this, I mean, that's perfect, guys. That sets us up for the start of this next push. Perfect setup. Perfect setup. And guess what? It's rare that you get a red cross. You can get two red crosses, or two green, in this case it's blue, but you can get two red and then two green back to back. You would actually see these just come back down together, but it's rare that you get something bearish followed by a red cross. It's very rare that happens. So it's possible we get a green cross here in the short term, and then we kick things off, man. That would be wonderful. That would set us up for a nice point of interest on the end of July going into August for a rip, right? We get a giant cross. This thing moves. We set up giant projector. Perfect. I mean, that would be ideal. So yes, the EMA 1348 is strong, and it's looking very, very nice here for Amy. What up, Matt? What's up, dude? Matt, yes. There is a possibility that, and with guys with options here, like, I'm not the type of person that waits for the expiration to exit my position at all. I never do that. That's like extremely risky, especially when you're fighting theta. So I always exit like way beforehand, expecting, you know, a push or a volatility push upward to exit my position. So cost averaging is huge. If you're able to cost average and then get it to a nice range, then you're able to profit off of the next, you know, that next level, that next push up. So personally, what I'm considering is exiting that position in the short term when we get a next volatility spike, which should be earlier next week. Right? I'm not like with these contracts, the date July 15th has nothing to do with the point of interest at all. In fact, the middle of the month is like the worst time to track volatility zones. They're rare to happen in the middle, right at the middle of the month. They typically happen towards the end of the month or towards the beginning of the month. So I would be exiting those, like, I'm personally exiting those contracts if, you know, if we don't get a double top earlier today, like towards the end of the day, where we come back up here and get a macro double top, then I will be exiting those sometime next week on another push up. Because again, those are specifically made for volatility, gaining off of volatility, not gaining off of waiting for it to hit $20. I personally don't play options like that. Not financial advice ever. All right, get that in your head, because it's not. Oh, price is frozen. Should be back up. There we go. All right. Let's see what we can find here. You guys know how I like to do this. I like to get the pattern and find it. Pattern analysis and finding natural fibs is the way to go. So natural fibs, just for a little recap here, is when you set up these levels here, high, low, mid, whatever, these are natural levels of support and resistance, and you get basically natural fibs using patterns. It's the best thing ever. Okay, I don't have to worry about taking your fib tool and doing anything with it. You just take the pattern and start tracking somewhere else, right? It's fun, dude. It's fun. Let's see, 3. Just right off the bat, trying to see where I can find this pattern. It's like right back here, dude. Look. Which is interesting, because paying attention really to these spikes here. But if you increase that right here, let's put it over here so we can kind of see what's going on. From the low, mid, right there, you can kind of see the same structure here where it comes up, comes back, and then makes this sort of arc pattern here before coming back down. And then you get a little bit of sideways pressure before going back up. So this is likely. I could see something like that. It would kind of make sense. And then maybe ending the day towards the higher range, higher level, or it doesn't, and then, right, you have a fractal fail right at this point and give up right here. But that's just how fractals work, guys. Fractals will end up giving up at some time in that sequence. And you're just gonna have to track. There's another pattern that basically tracks once that level is cut off, starts tracking another level. That's the fun thing about it. Then you have to find other patterns, and you can also find them inverse. Okay, for sure. For sure you can. I gotta check something real quick. Ha! Yo, there it is. Bam. Bam. Okay, cool. So let's take this guy. Look, and this kind of, bro, and this is what I'm talking about. This is why fucking fractals are cool, all right? Let's see how this pattern back here looks compared to that, because this is where you can kind of line these up, and they would kind of make sense here. See what I'm talking about? Like, because this range right here that we were tracking was below here. And it's understanding, like, where these levels track. Obviously, this pattern right here, I'm using the 3-hour chart time frame, so you're not going to see anything in detail. But you can see where the spikes are located. And it shows you these ranges, right? Not all are accurate, because this pattern is wonky. It's not one that I would use for everything, right? But some patterns are more accurate than others. You can tell how accurate this one is. All right, let's go back in here and see what's up. See what is up, bro. Okay, I see you. And that's kind of funny, because, like, where these patterns end up tracking to, like, for example, right here, you kind of got your bottom. So now I think what we're expected to do is probably take maybe a little breather back up here, and then come back down, trade sideways. But we'll let it do its thing until it's over, because, again, you have a pattern here tracking identical, and then right here, okay, it starts sort of doing its own thing, right? So you don't want to put too much faith in a pattern that has kind of broken out from the fibs. But what you can still do is, typically, even though it's not following the same pattern, whenever you find the zones of volatility, for example, like here, there's one. It was February 1st. We know that in the cycle, using the cycle tracker, there is a volatility zone there. And this works on the minute chart. This works on the 5-minute chart. Like, you can use this intraday, because there are zones that are being tracked intraday using the cycle tracker. It's there on any time frame. You will find the algorithm is trading. It's trading the same way than it is on the macro. So that's why fractals are useful if converted correctly, right? So here we know that we put a little bit less faith in a pattern like this, but there is tracking these levels where it goes up or down. You might see some correlation there. So back here, I will be tracking, and then somewhere in here, I'm going to be tracking as well for sure. And it's funny, because this level back here is towards the end of the day. So if we start getting a push up or a push down, we know that this fractal is valid because it's showing us that there's volatility, that this fractal has volatility, and it's correlating with the current price action. So yeah, we'll be tracking that for sure. I'm gonna keep it in here and we'll come back to it. All right, later. Devin, what is up, man? Vacay was good, man. We saw the family, the grandparents. It's been a little while, so it was fun. It was a good time. All right. AMC still trading on that zone here. Back down here. Not too worried. Here we could probably get a little V setup, V reversal here, and trade back into zone. There has been, after this pump here, there has been a it's been a short attack here for half the day, so it kind of makes sense for there to be a reversal here and trade upward here on this range. I wouldn't see like a complete downfall the entire day. You're starting to get a little bit of volume coming in now, so we'll see if that does start to kick things back up. You can tell right here, volume increasing as the price is going down. That's typically divergence, which is good, which is really good. If it's not following the price action, that's typically a indicator that the price is going to reverse. Not always, but it is something to consider here. We do have a little bit, it's a minute chart too, guys, but we do have some divergence. I will give you guys an example of the Discord, however. We did have some contracts open. Ended up cost averaging on those because we got in at 0.40 cents. And then from there, we did have the price action come back down a little bit. So that cost average around that, they went all the way down to like, I think, 20 cents. So if you cost averaged around those contracts, the $16 contracts for next week expiration, extreme high risk, extreme high reward, obviously. We did cut those back literally at the peak here. If you're in the Discord, you would have seen that, but the alert was sent right here at 39 cents. Cost average is 0.32, so that's a nice little increase here. Not a great, the greatest increase right there on those contracts, but those are more high risk, high reward. But that's why I'll also say this in the Discord, guys. I won't send out 10 plus contracts or option plays a day, because in my opinion, it's better to trade stocks that and make money on those versus trying to get in on every possible stock there is in the market. Because if you're not aware of how certain stocks behave and you just go into it thinking that it's going to go up, that's just it'll more than not be a disaster on that one play, rather than really focusing on 1 to 4 stocks and knowing how those trade. Obviously, again, the cycle tracker does find stocks everywhere in the market, but typically there's only going to be about 1 to 2 every single week as cycles trade against each other. So those, yes, there's going to be different stocks every week there, but with the main stocks that are traded, they are going to be obviously the SPY, since there's multiple expirations for options, AMC, GameStop, those guys are going to be like the more regularly traded using options, since I already know how it works. So yeah, just a heads up for that. Devin made 60% on that Mullen call. Hell yeah, dude. Hell yeah. All right, Devin going at it, man, with that Mullen. Yeah, I do have a Mullen option strategy up right now. I posted it this morning. There's a lot of details, obviously, that I go into that, but that's on the Discord. If you guys are, looking into something like that, then you can click the link below and click the cycle tracker. It'll be on there for you. But there's a nice little long-term strategy that I'm looking at here, and I did send that out in the morning when Mullen was at 90 cents, and it did go up 22% from there. So those contracts should be up a hefty bit. They're for the long term, obviously, so that's more of a long-term play. But there are a lot of points of interest that I am tracking for Mullen. And I do alert all that stuff every single day on the Discord. And there are, by the way, there are a couple of others coming out soon. Next week, there are 2 that I'm tracking right now for a pretty nice hefty return, because these have high volatility ranges. One of them is going to be Ethereum, and I will have a strategy posted for that soon as well. Ethereum has a couple of zones that we are tracking, and there's a couple of others that I will be updating as well. Remember, cycles trade against each other. When one goes up, one will come down. All right? That is how the market works. It's how these guys get rich, man. They don't want you knowing that. They don't want you knowing that. All right. All right, guys. We are going to be taking a break today. I will have a video out shortly to just basically summarize everything that I talked about in this stream. And it'll go over a lot of different things, so be on the lookout for that. Okay? If you guys want any if you have any questions or anything, or want updates on stuff, just make sure you join that Discord. There is a lot of people, like the Discord, just the chat is very simple. Like, I have a For You page, and then I have a chat, and it's specifically talking about AMC and the cycle. Everybody talks on it. It's very nice because there's not a lot on the Discord. It's very straightforward. There's no bots. There's none of that. Very straight to the point. So yeah, make sure you check that out. I will see you guys soon. All right, it was nice hanging out and chilling with you guys. I will be sending out updates on the Discord for the Patreon members. All right, right as I get off here, I got some things I gotta post on there. All right, I'll see you guys soon. Bye-bye. Take care. Love you. Trade.